Gold is approaching a massive liquidity zone right now, and Smart Money is actively preparing their next move. My primary focus today is a discount retracement long, looking to target major buy-side liquidity up at 4160. But here's the problem. Most retail traders are looking at the exact wrong level right now. In this analysis, we're breaking down how to position for a potential short-term drop into key discount liquidity before the real institutional buy program begins. Let me show you exactly where they're targeting.
Right now, we're sitting squarely in a pre-move consolidation phase. Let's be crystal clear out of the gate. Our higher time frame directional bias is ultimately bullish, and the main liquidity target is resting aggressively overhead at 4160. But to get there safely, we can't just blindly buy. The primary trading idea is to wait for a sharp, manipulative institutional drop into a discount array, allowing us to capture long positions right alongside Smart Money.
Okay, let's dive straight into today's trading plan.
Here is the exact setup we're tracking. The daily bias remains strictly bullish. The primary setup is a discount retracement long. The key buy zone you need to watch is the fair value gap resting perfectly between 4108 and 4122. Once that specific zone is mitigated, our target shifts to the massive buy-side liquidity resting at 4160 and eventually up to 4185. That's the execution plan. Now let's break down exactly why Smart Money is engineering this specific path.
To understand that, we need to look at the institutional draw on price.
If we look at the higher time frame narrative, you'll see price recently swept major sell-side liquidity down at the 3980 level. That deep sweep engineered a really aggressive bullish displacement, and that momentum, it's now acting like a magnet, aggressively drawing price directly toward those unmitigated swing highs. The algorithmic trend has officially shifted, and institutions are clearly targeting that overhead liquidity.
But this brings us to a crucial concept, the delicate relationship between internal and external liquidity. Smart Money absolutely requires counterparty orders. To accumulate enough heavy long positions to successfully attack that external 4160 buy-side liquidity, they first need to sweep the internal stops resting right around 4125. They literally need retail sellers to match their massive institutional buy orders.
Take a look at the current playing field. Right now, prices around 4140 are sitting in an extreme premium array relative to the recent swing. This is exactly why chasing longs right here is a critical mistake. Institutions do not buy at a premium, they wait. They manipulate price to accumulate at a deep discount.
And this liquidity pool changes everything. There is a massive inefficiency, a 1-hour fair value gap, resting perfectly between 4108 and 4122. This acts as the primary magnetic draw for that required internal sweep we just talked about. The algorithm essentially has to rebalance this exact area before it can efficiently expand higher.
All right, let's map out the executable ICT trade plan. Here is the precise sequence we require before a single dollar of capital is risked. Step 1, we wait for that 4125 internal sell-side liquidity to be swept. Step 2, we need to see a confirmed bullish market structure shift on the 15-minute time frame backed by strong displacement. And step 3, we only enter long on the retest of the newly formed 15-minute fair value gap. Smart Money confirmation must appear first, period.
Once those strict conditions are met, here are the exact risk management parameters. The entry zone is dialed in tightly between 4115 and 4122. The hard stop loss goes at 4102, safely tucked below the structural swing low. Take Profit 1 targets the recent intraday high at 4142 to secure partials, and Take Profit 2 is our major external target at 4160. This setup provides a highly favorable institutional risk-to-reward ratio of 1 to 3.2.
But here's the problem. Right now, there is no trade. I'll say it again, there is absolutely no trade currently active. Institutional confirmation has not yet appeared. Price is just floating at extreme premium highs without offering us an optimal trade entry. Following this analysis means our primary job right now is simply to wait.
Which brings us to the retail breakout trap. This is exactly where most traders get trapped. The standard retail strategy is looking at that 4140 level, seeing upward momentum, and buying the premium breakout out of pure FOMO. They're completely unaware that Smart Money is engineering a false breakout just to sweep their stops. The Smart Money strategy, however, is waiting patiently for a Judas Swing, a sharp, manipulative drop straight down into our 4108 to 4122 discount array.
And the market is sending a warning signal about exactly when this trap will be sprung. Today, we have high-impact US ADP and ISM news data hitting the wire.
You combine this with the ongoing diplomatic negotiations between the US, Iran, and Oman surrounding the Strait of Hormuz, and you have the perfect volatility injectors. Institutions use these exact fundamental news windows to quietly execute their technical liquidity sweeps.
So here's the chronological manipulation cycle you can expect. First, in the pre-news environments, algorithms accumulate retail breakout buyers around 4140. Second, as the news event actually hits, they execute that sharp Judas swing down to violently sweep the 4125 internal sell-side liquidity. Finally, post-news, once their massive orders are filled at a steep discount, we'll likely see aggressive one-sided displacement directly toward that 4160 buy-side liquidity target.
Let's do a rapid final recap to lock all this in. The overall bias is a bullish continuation. The entry must be specifically within the discount fair value gap between 4108 and 4122. The main target is 4160, however this invalidation level becomes absolutely critical, 4068. If we get a 1-hour close below 4068, the entire bullish order flow model is invalidated and the setup is canceled. Above all else, the golden rule today is to wait for that 15-minute confirmation.
If you enjoy institutional-style market analysis using ICT and Smart Money Concepts, make sure to subscribe to ICT Market Theory. And if you'd like to trade alongside these setups, you can find the FXTM account link in the pinned comment below. The stage is set, the trap is laid, and the volatility injectors are primed. So the only question left is, when the Judas swing hits, will you be the liquidity or will you be trading alongside smart money?